All right, welcome back to our countdown on the top 10 reasons why any person should consider investing in real estate. I'm Dan Cosgrove, the CMO of Anthem Capital, and as a recap from our prior video, we unveiled reasons 6 through 10, which were number 10, it's easy to understand. Number 9, you have more control. Number 8, provides passive income. Number 7, you can get better leverage. And number 6, equity. Today we're going to cover reasons 1 through 5. And so starting at number 5, we have that word tax benefits. So when you're investing in real estate, there's a lot of tax benefits that are associated with it. You can deduct several expenses associated with owning investment property, including your property taxes, mortgage interest, property management fees, property insurance, the cost of ongoing maintenance, the cost of repairs, and the money you pay to market your property to potential renters. So a lot of things. Additionally, with the current tax laws as of the making of this video, which is 2022, you can benefit from this thing called bonus depreciation, which accelerates all 5 and 15-year assets on your property into year 1. This means your on paper loss could offset your other income earned that year, and it can be rolled over to the next year too, if you don't have to, if you can't use it all up essentially. And when you want to sell your property for more than you paid for it, the gain you realized won't be taxed as income, but instead it will be taxed as capital gains, which typically comes with a lower tax rate than does normal income. So that's number 5. So now number 4 though is it's a hedge against inflation. You know, inflation's been a big scary word, especially here in 2022 and 2021. I mean, it is scary, but listen to this statistic. As of making this video, once again, in 2022, we have seen about a 12% increase between the start of COVID in 2020 and May of 2022. Inflation erodes the value of many investments. For example, if your annual gain last year from your stock portfolio was 10%, your actual profit was only 1.5%, with the purchasing power of your money decreasing by the rate of inflation, which has been 8.5% in the trailing 12 months. That's rough. Now, luckily for you, real estate investments keep pace with inflation. A well-structured rental agreement will have a clause in place that allows for rents to increase by at least the inflation rate. The one thing that doesn't increase is the monthly cost of your fixed rate mortgage payment. So as your annual rental income increases, your cost of ownership doesn't. As inflation pushes the cost of living higher, your cash flow increases, and inflation drives up the value of the property itself. So number 3, it's the stability to weather any storm. When you factor in the return and risk associated with buying property versus buying a stock, property is considered far safer. I consider it the best value to risk ratio out there. These last few unstable economic years have taught investors that they must find assets that are both powerful and stable. That is exactly what real estate offers. Assuming you have done your upfront research, created a good business plan, and invested with the right partners, your investment should steadily increase in value and deliver positive returns irregardless of what is occurring in the economy around you. Why? Because people will always need a home to live in. And there is still an imbalance in the supply and the demand ratio for housing needs, thus driving up rental prices. So number 2, cash flow. Rental properties provide a steady flow of income on a month-to-month basis. An ideal investment should be able to cash flow on day 1, but most investments have a lag between the investment and the first disbursement to its investors because the owners of the property want to use the excess cash generated in the first few months to reinvest in increasing the value of the property with upgrades in and around the units. These upgrades ultimately increase the cash flow payout in later years, and an ideal cash-on-cash return is 7 to 10%. But that will all depend on the type of investment and other macroeconomic factors. Now, as of the day of making this video, maybe a 5% cash flow is more realistic, just due to what's going on in the macroeconomic factors of the economy. And so now number one is appreciation. Apartment complex type real estate investments that are thoughtfully selected have a great chance of appreciating over time without you having to lift a finger. Sure, there can be market corrections, but that has a greater impact on single family home prices, sales, and also that stock that you're investing in. Whereas apartment complexes are a tangible asset that will always have value based on the land in the physical property that you own. And if you invest in a property that fits specific criteria that I'll share in a separate video of what that type of criteria is, then you are nearly guaranteed to make a positive return on your investment. The reason being is that real estate is driven by supply and demand. If you are investing in a market where there's a shortage of units available with a growing population, then the value of your property will increase with higher demand and thus higher rental rates. Investing in real estate just for appreciation is not a bad idea, but we suggest you look for investments that can appreciate and split out a positive cash flow to you during your holding years that can give you those total returns of 75 to 100% of your original investment in under 5 years. So that was reason one. So I really appreciate you guys watching our top 10 reasons to invest in real estate. If you want to learn more about real estate investing, such as the 5 watch outs of real estate investing, the 3 keys to look for as a passive investor before investing, the 5 most important things to look for before buying a property, and much more, you can follow us here or visit us at anthemcp.com by scanning this QR code or clicking the link below to get access to all the other great content we have to help the everyday investor like you become more educated on real estate investing. Thanks so much. Have a great day.